Okay, so let's go on and go over the news. As I mentioned, we already mentioned the RBA rate cut. Also, when we're looking in crude, one of the things that came across, I did share that on the Inside call. Let's go and move on to here. So crude's a little bit on the bid this morning, and let me switch over here. Just one moment. We're at 59.43 on the crude right now, and one of the things that came in over the weekend, it looked like they settled everything in or to a certain extent in Libya. They actually sent out a couple of tankers, one of them, full to the gills. But like I said, we have this news story that just came out, which is providing a bid in the crude. Protesters closed eastern Libyan oil port of Zutina. For the port engineer, it says protesters demand state jobs have shut down the eastern Libyan oil export of Zutina, a port engineer said on Monday. No more information was immediately available. Libyan oil ports and oil fields regularly have to shut down due to protesters seizing them or armed groups fighting or control the facilities. The protesters were complaining that they had been hired by the state as promised by a previous oil minister, said the engineer, asking not to be named. They closed a pipeline leading to the port. Zutina is one of the few Libyan ports still exporting oil, as the largest have closed due to fighting or blocked oil fields connected to them, a part of turmoil ongoing through the North African country 4 years after the ousting of Muammar Gaddafi. So that's adding a bit to the crude oil here today. And go moving here. Okay, now here I think, this has more to do, what's going on here. And we're looking at, and like I said, I like to try and keep a, kind of an overview of what things are going, because it gives you an idea, it gives you perspective. That way you're not swayed by just the market price swings. I mean, it gives me an idea, like when I was selling on Friday Eurodollar at right there, 12.89, 12.89 I had a limit, got filled, I think it was at 12.90, it just jumped up real quick. Or yesterday, when I still sold them yesterday, if you were here with us live on the morning edge, literally caught the top tick. I might have missed the top tick by about two ticks, maybe. And same thing on Friday, did the same thing there. It gives you a perspective of where things are going to go. I'm not trying to brag, but, yesterday I had a gentleman ask me, he was thinking about buying options going into the with Eurodollar. And I was saying, you're going to pay so much in premium because of the volatility that we're seeing. I go, you're better off, why don't you just go in and sell it on a rally and use what, part of what you would have spent on the premium, essentially. I can't give out advice, but essentially what you would have spent on the premium, and sell it at a good level, because my guess is, not my guess, but my thoughts were that the risk is going to be lower going ahead. And I even mentioned the 1171 level, because that was the apex of this triangle that we were looking at. And I actually had a limit at 73, and then when the market was holding so well there, I moved the limit up to 79, and I got filled on there at 1179. And then I said, I'm very happy with it. It's a very, very small position, but I'm going to sell it again. And so I hit it at market, and it was, I think it was, I didn't even check my price. I don't even check prices that often, but it was I think it was at 1188 at that moment, or 1189, and I hit the market. And then quickly, not too long right after that, we're heading south of the border. And I'm just saying is, when I follow the news, or the news flow, not so much the fundamental news, even with same thing with equities, or with SPOOs or crude, it gives me a perspective, so that while everybody's losing their frickin' heads at the top or losing their frickin' heads at the bottom, I'm over there taking the other side, which more often than not, I'm more comfortable taking the other side of a trade than going along with a trend. You put me on a trendy market, and I can't make a nickel for nothing. But you put me in a choppy market, then, like I said, I'll be, flipping them like nobody's business. But anyway, so here we are on the nickel, and like I said, I saw that there was some thoughts that they weren't going to cut um, the RBA. I knew that they were going to cut. I mean, that was just obvious. Once again, the same thing I used, and I don't even follow the Australian dollar that much, but when they did the other months, it was kind of a bit of a surprise. But you knew if they're going to do it, they got to do it now. You can't wait. So I can't believe people were thinking that they were not going to go in and cut. I mean, it was obvious that they would. That being said, I wasn't going to stay up to watch that sack of crap. Um, and like I said, I'm glad I did. Now, uh, one guy, he made a very good point. He said it's a coin flip because when they ran the Aussie dollar up to 80 cents, he goes, all the commercials already ran it down the pike, so they already made their money. So it was a coin flip, and I mean, you could have gone and just said, well, they're probably going to go and cut anyway. Let me take a whack at it. But you wouldn't even got paid that much money for it, and then the market came back. So here's the reason why. I mean, the strength of the copper and iron ore is starting to bottom out. Which back in January, if you remember, I was the one that was pointing out, that the iron ore just kept falling and falling. And I was actually, I think it was since going into December, but then in January, it looked like it was really going to go and exacerbate a fall, and that's essentially what happened. And I was at the time, I was even looking for, I remember saying that, I'm looking for a rise in the first week of February, and you want to hammer the F out of this Aussie dollar. And that's what happened with the iron ore, just kept on falling apart. And then you did get a little bit of a rally in the Aussie dollar the first week of February. And I think it might have lasted a little bit longer, or it cut itself short. But anyway, the rest is history, because you know how this thing just kept falling lower and lower and lower. So anyway, so here's the thing. It says London nickel hits 5-year high, copper near 4-month top. Um, London nickel edged to its highest level in the 5 weeks on Tuesday as prospects of a tighter supply and a technical rally drove a recovery from the last month's 6-year lows. Now, some of you might say, well, what the hell do I care about nickel? And to a certain lesser extent, maybe copper. Well, the thing is, this gives you an idea, once again, if you were thinking the RBA cut the Aussie dollar, and I'm going to be selling the Aussie dollar, I'm going to be making tons of money over the next few days and weeks, well, then you would have known not to go in and stay with that doggone trade or question it. It's the same token way you would have known when copper kept falling out of bed, as well as iron ore, you could still press it on the short side in Aussie dollar, although we came into levels where they could hold, and it would hold a little bit, but not much. And that's what I'm saying. I don't have time to fool around with the market like that. I really don't. So, but like I said, it gave you an overall bearing of where the market was going to go. So we come back in here, it says London copper slipped from the near 4-month highs as the markets more broadly digested a stream of weak global factor reports that it may push monetary officials in the U.S. and China to maintain easier policies. Now, let me tell you, friend, not yesterday, but a week ago, that weekend coming in, I tweeted, and you can check my stream, I said, Aussie dollar shorts need to be very cautious here. And I think it said something like there's not much downside left or whatever. And we had a very nice rally from this last week. And I warned that. I sent that tweet out on a Sunday. Aussie shorts should be, and it wasn't this Sunday, the Sunday before, right before we got that nice big move. I said that Aussie shorts need to be very wary or very cautious because we were already starting to see this move starting to accelerate in copper. And that's why it's so important to follow the news, what I call the news flow. Not necessarily the news itself, but the news flow, because that gives you that perspective. Because the market's going to move wherever the market wants to move in the very short-term run. It's the same thing with the euro dollar. When they got overdone, I just kept selling it as you get certain levels, and I'd take my money and run and then come back right up to a new level. But I knew overall it was overdone. I mean, I pointed that out even on Friday. I did again. Cannot believe this. Try to move this over here. Hang on. I'm going to move this over here. So here we are on the currency chart. So hang on a moment. Let me get this going. I'm so used to talking with my frickin' hands that I couldn't move that. Hang on. But this gives you a perspective, and I'm trying to move this stuff. I don't even want to try and restart up this Reuters feed, so hang on. I don't even want to go there. Boy, I swear, if anything can go wrong, it will go wrong. But this gave me the idea, not the idea, but why I didn't want to go in and be with the Aussie dollar, continue to go in and press that short side that apparently, people were willing to go in and do, uh, a little over a week ago. And that's what I was telling people, you need to go in and be cautious here. I think it's in place. Let's see. For bears to go in and be cautious, and I'm trying to close off this. Let me switch this over, switch the screen over. So we're back here on the spoos. Let me go and pull up this piece of crap. Really pissing me off this morning. Can't believe twice back to back. Just got to manually put all this back together. But here we are here on the spoos, and as I mentioned yesterday, I thought that we could go on and make that run up to that, make the run up there on the bid because it's put new money to work on Monday. Move this over here. But I thought that we would go on and run into some trouble. Bob says you are the best, of course, except for Blake. You got that right. Boy, I'm really having my challenges this morning. But anyway, so I thought we'd run into trouble between this 21 1175. Let's go and switch on over here to the 30-minute. Boy, what a way to start the day, I tell you. And it's a long day to start with. So we opened up this morning. If you remember, we were in the 6, and we had some support here at this 4 1/4, and I was looking for a rally because, you know, the same old Groundhog Day, put new money to work coming into Monday, and it was also the first Monday of the new month. And but I felt that we would run into trouble here in this purple area, which was 1175 on up to 1475. And we'll go in and clean this up a little bit. At this point, I don't even want to move my arms now. Golly, I already whacked that thing twice, knocked all the stuff off. So we're actually in a sell mode now. If you look at that, we've been in a buy mode this entire time. But like I told you, is I was looking for that put new money to work Monday, which is definitely not saying anything because that's how it's been playing. The only difference was that I felt that we would run into trouble here at this 1175. Let's go in and mark that off. Damn it, don't even want to move my hands over here. Knock that doggone cord again. I can't believe I knocked that cord again for the second damn time in one, literally within moments. So this is what we're at, and this is on the 30-minute. We've actually got ourselves a little sell signal here. And the deal is when you get the sell signal, doesn't mean you just willy-nilly just stay short the whole time. But what you're looking for at that point is, because then you've already fallen back. Look how much we've fallen back. You know, now it's time to sell. I mean, you have to be a freaking idiot if you're going to do that, trade that way. But what you want to do then at that point is look to go and sell on rallies. It's the same principle we used yesterday when we sold the crude oil. If you remember, I was looking for that level in the crude oil, and we got it here in the European crossover, and it was good for 30 cents, but we got it again in the morning edge. It hit that level that we were talking about. And like I said, with the exception of yesterday when I mentioned the euro dollar, I'm not going to be telling people, I don't, you know, just like that gentleman was asking about the options, I don't know your risk tolerance, I don't know your account size, I can't give out any trade recommendations. All I can say is what I'm doing at the moment. And I can't be any more clear than I was yesterday with the crude oil and the euro dollar. I'm not going to tell you hit the buy button, hit the sell button. You know, that's just not, it's not for me to go and do. And everybody has their own account, and they're big boys and big girls, and they're going to have to know how to trade their own account. I mean, I can just give you ideas where I believe there's resistance, and that the percentages or probabilities on your side are depend on which way you trade in the market. And I'm giving my a reference point of trading the market. Like I said yesterday when I've been mentioned about being bearish to crude oil, blah blah blah. Now obviously we've gone up rally today. We're on the bid because of the Libyan news, and you know the thing is, until we totally fall apart, the bulls, technically speaking, have been right on this market. So that market's going to go and retain its bid. But anyway, here we are on the spruce. I just see not a whole lot happening here overall, other than playing, you know, these particular, I won't say ranges or levels, but this is 1175. I just don't see where there's a whole lot to be overall to be gained in the market other than just playing this. I mean, if you just trade SPOOs all day, then you got to do what you got to do. And when I'm looking at it now, you know, I've got this level here at 6. Let me move this here. And you're just going to have to trade these ranges. I'm not even looking even at fibs because the ranges are so tight that you could be looking here and say, well, that's a 50%, and that's a 60%, and that's a 7. That's all BS at this point when the ranges are this tight. So at this point, 425 is pretty key. So we'll move that over here. And you can see it played out here, and they came down here, and they found support in that same area. And that's all they're doing. When you get in a tight range like that, they're just moving from level to level. You don't need those stupid oscillators. Like those stupid oscillators are the stupidest thing I ever saw. They really are. When you get down here and something like this, the way the spoos are trading this narrow range, they're not paying attention to the 30-minute RSI or the 15-minute stochastics. That's all a bunch of hogwash. They're just going by the levels. If you're dumb enough to go in and buy into that stuff, then you get what you get. You know, I'm just telling you the way it is. Not that I know so much, but I'm just saying is you know, it's proven itself out over and over and over and over again. You know, one of the things, like way back in the day, I used to go and trade the spoos. I was like, you know, I can't understand this, the way these spoos go. They just kind of do their own thing, and still to a certain extent they do. But then when you start to see that these markets move from level to level, and then they'll hit or use Fibonacci as a target retracement or target projection. And then to keep yourself on the right side of the market, I try and keep it simple. I use an pair of exponential moving averages, and that's it. Keep it simple. And I mean, if all you did was trade spoos all day long, then maybe you can go on and mix up a few things and use Donkin and CCI and all these other things. Look, I'm just telling you, it just goes by the levels and the fibs. And that's how this market loves to go on and trade. Especially something like spoos. I can see with some with currencies where you have a lot of, you know, mitigating factors that can go on and cause a market to move for an extended length of time. But with spoos, it's all about, to me, I'm looking at, you know, flows, overall general news, and then it's just all, but primarily it's all about the levels. And that's what I'm saying. I think that what people don't understand, they try and make it more complicated, and because they can't figure it out, they basically say the boogeyman's doing it. And you know who the boogeyman is? That's the algos. Those that don't know how to trade are the ones that complain about the algos. I even see some big traders complain about the algos. It's really embarrassing. It truly is. I'm not even exaggerating. There's some very well-known, successful traders, and when they get into their little quagmire, they start crying like little Girl Scouts about the boogeyman. The algos got them. It's the biggest sack of crap I ever saw. So that's what I'm saying is, if you go by just what the levels are, and you can see when a market's starting to turn for whatever reason, and some of this stuff, you can't fight it. If the market wants to go on and keep rallying on these Mondays, you just have to get the heck out of the way, because traders are creatures of habits. And they're going to go on and keep doing what they're going to do. They're going to keep doing what works until it doesn't work anymore. That's the same, you know, when I used to trade way back in the day, you know, I kept trying to find senses of logic, or where, you know, stuff has to be. It has to do this way. It has to be that way. And, you know, it used to, you know, tick me off when people would say, oh, that's just gambling. And no, it's not. It's well, you know, I was watching this great documentaries on Netflix, and I think it actually was talking about, I can't remember the name of the documentary, but I saw it recently, and had seen it once before, a long time ago. And it's essentially, it was called Floored, Floored. And it's on Netflix. And it talks about the transition essentially from the floor to, you know, mechanized trading, or computer trading, whatever you want to go and call it. And, you know, they had, you know, both the Nigerian brothers on there, and Pete was saying, you know, some people don't like to hear that it's gambling. He said, you know, what else is it? He goes, you know, and really everything's a gamble in life, no matter what you look at. I mean, it's the same thing even with insurance companies. You know, they're taking actuarials and blah, 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 and all this other stuff. But the thing is, you know, you're trying to find logic sometimes when there is no logic. And it's just trading. That's it. If you look at it, it took me a long time to try and figure out or wrap around my head, just say, you know what, some stuff it just is. It's just trading. That's it. And these guys and gals are going to keep doing the same old thing until it doesn't work anymore. And some of these people, they have a belief, and it's good to have a conviction. And I'm more so than most others will be opinionated. But it's true. You have to be willing to go on, and you have to be very malleable in the sense you have to be willing to flip the other direction, and forget what you said before. Just like, okay, well, I guess now they want to buy them, because now they keep pushing them up higher, because these guys and gals are going to keep doing what works for them overall. And that's what I'm saying. The idea of me using these exponential moving averages is just to keep myself on the right side of the market overall. That's about it. But I just don't see a whole lot happening, and that's what I'm saying. At least for me, I found a happy median by trying to focus on a few markets, and then if I don't see anything happening in one market, I look at other markets or other pairs for better opportunities where I feel that the probabilities are more in my favor. It's that simple. So that, like I said, there was a good 2 week stretch where I didn't do a doggone thing in SPOOs, and right now I'm not doing anything in SPOOs, and because there's better opportunities elsewhere. And so, same thing with crude. Crude was fantastic a couple of months back, and now, it's a little bit tougher. You have to really come in and choose your spots. And what am I going to fool with that when I can just go into the currency markets or trade, your dollars? So, excuse me. That's what I'm saying you can make this stuff as hard as you want. And the only reason I'm kind of like, I'm not going off on a bunny trail here. It's just that there's not a whole lot happening today. So instead of giving you a whole bunch of moggly glook, I'd rather just kind of like focus on, what we can go on and do. Take a look here. Look on it. I swear it's been one of those frickin' days. So, what I'm trying to go on in shares is it's a day like today, maybe it's best to go on and focus on the news, focus on perspectives, focus on ideas, maybe not ideas for trading, but, a general look or perspective on how you want to go on and view the market. Let me see. I am going to go and take a break before we start the morning edge. Hang on one second. So we'll go and take a look here at crude, and crude still remains on the bid for good reasons, because technically it's still in good shape. As long as we can hold above this, we talked about this yesterday. As long as we can hold above this 58.83, we're still good. Now I expected by the middle of this week we'd be well within under 58.83, but like they say, I always say that same old thing. The funny thing happened on the way to Palladium, and then we got that Libyan news all over again. I mean, I'll be doggone if Sunday they weren't settling the strikes, and a tanker filled to the gills was out the door, and another one was more than halfway full going out the door too, and now it looks like they started the thing all over again. So now we're back, cruise back on the bid. But you're just gonna have to pick and choose your spots, and that's what I said. It's been, it's even across even in crude too. It's been even more so than crude as opposed to FX. It's been just a day trader's market. You have to look at it. I mean, you have to take whatever the market's willing to go in and give you. You hear these trite sayings that people say, but it's even more so now over the last few weeks. If the market's only willing to give you a little bit here and there, you got to go in and narrow those perspectives and take what that market's willing to give you. And we know that in crude, for nearly 2 weeks, the range was only $2.25. So I'm going to go and take, okay, good. We still have a few more minutes before. I'm going to definitely take a break before we get into the morning edge. But we'll go on and focus and take a look more on crude. We're back here at this 59.53, kind of looking at this upside. I think that they will want to challenge, because anybody that was trying to press on the short side, I'll give you an example. Let's say some people have said, you know what, we finally broke it. I think we're definitely going to be heading low for crude. Well, as we held this 58.83, some of those people might have bailed, but you might have some people that are they're going to trade just the technicals. They say they don't pay attention to the news. They don't pay attention to anything, just the charts. It's all on the charts. So when they broke here, they probably had some sell signals. So those guys and gals aren't getting out unless we get above this high or above this high. Well, they're going to make those guys and gals pay the price and push that price higher. Maybe we can even take out this high here and get up to 60.10. So that's what I'm saying. Sometimes you're better off just sitting back and observing it and wait until you get those. You hear that, and especially in a market like this where you're seeing crude, and now because we were looking for a breakdown here, which we got it. We got below 58.83. They closed below it, but they quickly closed above it right here. We'll focus more on here. We closed below it, and then we got right back above it here. And the market, you see how it's been struggling with this 58.83 here. So now you're getting these people that are having to pay the piper back. Okay, but until the market goes and until the market is willing to go on and trade in that direction, if we were to eventually get lower, the overall bias is definitely on the bull side, not on the bear side. I mean, we can take our whacks at certain key levels like we did yesterday, but that was coming off of Friday, and it looked like the news was bearish after we got the good news from Libya over the weekend. But now here we are coming right back again. But the key thing is that this breakdown has not come to fruition as far as really pushing it lower. So they're going to go in and squeeze them even higher. My guess is we should be able to take out this 59.67 in here. And we'll maybe be able to also take out the highs a little bit. We'll start to see what happens here at $60.10. But once again, I'm still more of the owners to play it on the short side, but you can't deny the bull side in here. So we're going to go and take a break before we go into the start up the morning edge. So let me go in and switch back to the new screen. Hang on.